UBS Managing Director and Senior Portfolio Manager, a big money guy. Well, I mean, how do you interpret that? So he's just one voting member. There are 12 on the Federal Reserve Board, and a couple of them last time around started to wave their hands and say, hold up, we think that we need a slight rate cut at the next meeting.
So I think he's on an island, or maybe he has one other person on that island with him. The vast majority of those members see the handwriting on the wall. You look at that inflation print, the shelter component makes up 35% of it, and that's showing signs of moderating. So you want to get ahead of this. You want to cut rates from a position of strength, not weakness. Add to that some of the political pressure and the so-called shadow Fed that's forming. I don't think rate cuts are a matter of if, it's when. You said it, 90-some-odd% chance of a cut in September.
The market and Fed funds futures have been wrong in the past, though. And when you have a guy like Schmidt plus Powell, the Fed chair, Jay Powell, they've been very serious about, hold up, we don't want to make a mistake and cut rates, and then suddenly we start to see the follow-through of tariffs causing inflation. But, you know, it's been 6 months. Yeah. It's been 6 months, and Stephen Myron, who has just been brought on to the Federal Reserve Board by President Trump, he said this today on Fox News.
There's no evidence thus far now. We've been doing tariffs in this administration since January 20th. Remember, we started with Canada, Mexico, and China from the get-go. And there hasn't been, it's now over 6 months, and there's still no evidence of it whatsoever. So the burden of proof is definitely on the naysayers.
Oh, that's exactly what you say. And on top of it, the market is absolutely jumping at the moment. But do you get in here at these elevated prices?
It depends on where you get in. The burden of proof is that we have to show us the money. I mean, the economy, the market has to show us the money. Get over the finish line with respect to trade. Show us that inflation's moderating. Above all, show us that the job market can hold in there. So at 23 some odd times earnings, markets have pulled forward a lot of good performance. And so I expect a consolidation of these gains, but I do think there are pockets of the market that are still extraordinarily cheap and investable.
Such as, what are you guiding your high net worth clients and even your regular clients in?
Well, first of all, deregulation, we don't even talk about that, and that's the next big catalyst here. Deregulation will help the banks and brokers. It'll help the energy complex. Let's start with the financials.
I look at them today. We can put up both the big and the small ones. I mean, right now, I just quickly checked some of the bigger names and the medium-sized integrated money center banks, and they are popping here. I mean, anywhere from 3 to 4%.
As they should. Because when you have a rate-friendly environment, which we're going to enter into, their net interest margins are going to explode. Then you get deregulation where they can loosen their purse strings and use their balance sheet. You'll see a huge jump in capital market activity. Then if you look to the energy complex, we don't even talk about the deregulation there. When you don't have the same onerous permitting process, you could drill, baby, drill. That creates more jobs. It brings energy costs down. It allows us not to be beholden to our enemies for energy. And those stocks are at 10-year low multiples relative to their history.
Well, it's true. I mean, one of the worst performing sectors of the S&P this year is energy. Okay, so that is not overbought, I would say. I like that. When you look at the financials, maybe the bigger ones are overbought. Which part of the financial spectrum do you recommend people getting into?
Well, you talked about the Russell before, up over 2% today. Who benefits the most? Small companies that are most dependent on lower interest rates, because these are mostly domestic companies that borrow a lot. What about the smaller banks and brokers, the regional banks in particular? The group hasn't been this cheap in many, many years.
I have to ask you about tech, because technology is the real driver over the past, let's call it now, 2.5, 3 years. Yesterday, we led with the story that the CEO of Intel, and Intel, by the way, has been jumping the past 48 hours, and today it's seeing another gain. It's very close to the top of the NASDAQ 100. Lip-Bu-Tan, the CEO, came under fire by President Trump and some members of Congress saying, oh my gosh, he's investing in Chinese companies, and he runs Intel, which does a lot of work with the U.S. government. So Intel was oversold in a way. Now it looks good because Lip-Bu-Tan met with President Trump yesterday, and Trump said, you know what, in a week, we'll come back with, you know, the recommendations there. But boy, he has a great gutsy story. He's a, American citizen. He came from Malaysia, built himself up. But those are individual stories. What about the broader Mag 7?
Yeah. Well, The easiest and the best way that I'm counseling clients to invest in the whole AI complex is look no further than that Mag 7.
Really?
Who do you think controls the eyeballs through their devices and the websites? It's those companies. Who has the deepest pockets to do M&A activity or R&D? Who has the most compute power? So why try to find tomorrow's AI blue chip when you could actually look no further than today's AI blue chips, and that's the Mag 7. Stay invested there.
So you're looking at where the puck is. And again, Apple's such a big story. In fact, I believe a month to date up 10%. Now, that one was maybe a little oversold, so you wouldn't be buying at the very top. So we always try and give some perspective to our viewers in that regard. But you're liking the Mag 7.
I am.
Good to see you, Jason.
You bet, Liz.
Jason Katz of UBS.